So I'm going to do the 1 hour chart now using the template of a 2, 3, and a 4 period moving average in a cloud fashion where we're putting a histogram up. Essentially, this template is going to slow down the playback of the robot because all the math, and this is pretty math extensive template because it's going to take high, low, maybe open, close into account, going to smooth them out. Then we have a 4 period moving average that gives us, well, the difference between the 2 and 3 or the 2 and 4 is this trailing, I call that the hyper vacuum. You have to have a book to go along with it. But see this, the pressure, it's like this has a huge trailing vacuum. So we know there's a lot of velocity to the move because of the size of the trail, the size of this kind of the last cloud. And you could open up each one of these, but currently the way it's running, which doesn't have to be like this necessarily, on the indicator list, it is literally 100 pips, 50. Now this isn't because I think the market's going to turn it 100 like the Forex nonsense guy. This is just so I can get a clue as how many pips I'm risking if I hand drop an order as opposed to watching the robot trade. How deep can these markets move on a 1 hour chart? Can we move 50 pips a day on the Eurodollar? Can we move 200 pips a day? Yes, you can move 200 pips a day, and this always happens when you're filling a larger vacuum. If you look left, vacuums leave clues, and you're looking for this huge, the giant sucking sound. I also call it the Ross Perot trade. But that is what happens in Ross Perot nailed it, because the giant sucking sound is jobs leaving the United States, and this is the order imbalance, and even the fundamentalists like Wayne's World would agree that, okay, there's a reason why there's an exchange going on. Yeah, don't forget there's pent-up demand, dumb shit. The fact that you think you're on top of these moves. I just listened to the Dirty Dozen. I only made it halfway through the Dirty Dozen, and once again, the big banks are making money off retail traders, even though retail traders aren't controlling the market somehow. The banks are all agreeing on the trades. They're all making money simultaneously. And the retail traders are what's funding the banks. That's the big bank theory of trading, which is complete bullshit. There's people on all sides of that trade, against you and for you. So somebody asked me, is it okay to buy the market if it goes down 4 hours instead of a half an hour? Yes, but we're presupposing that you have a clue as to where we are in the larger structure, and if you want to start building a position in the market, because it's not the fear of missing out, it's the fact that that is a fucking move. Now, to pull the trigger once there is completely different than pulling it 5 times or buying 40 standard lots just because it went down in 4 hours. You're trading with a number that exists between, ideally, you're trading either a 1K, nothing, or you're in 180K because the market told you to do 180K. The market has laid out the path. Okay, it's already there, right? Each person that you meet has a fractal, and if you can identify, you go, oh, he's that kind of person. Not to stereotype them, but to put them in a category off the bat so you don't have to overwhelm your mind with all this repetitive stuff. So once you can figure somebody out, of course, the checklist is always expanding, isn't it? I mean, okay, looks like that. Okay, I can see that. Oh, that's... Here we're crushing into new lows. This is all the uncharted somewhere in time chart for me right now. Now, the way I did this was, first we have the 0 handles or the 100. We have the 50. We have the spread indicator. Then we have the very huge background, the 16 pixels wide. 16 pips wide. And the 10 pip cloud is a shorter period moving average, and this is the tightest moving average, which is going to be the small blue lines down and the small green lines up. That is on top. The most fastest cloud is on top of the slowest cloud. whatever you stack at the top of this rack is the first thing that paints on the screen. So if you change this, it dramatically changes the way the candle looks. But the idea here is to create like a 3D candle or an instant glance. Okay. It's blue. It's in a downtrend. Just to put a bullshit trend on it, right? It doesn't mean that when it counters for two greens into a bluer cloud that if you were on MT5, you could probably scroll. Or if you're on a platform that can scroll every half hour where the candle gets bigger by a half hour until it reaches 5.5 hours instead of 4 hours, and it becomes more of a Renko kind of view where, okay, I've dialed this in. This is completely capturing the essence, but that's the current. And then on top of everything, I have current prices in black. Non-directional, it's black all day long, up and down. Then I have the price pulse of the market, the kick drum. I have the moving average on close, true trend. That's where you need to draw trend lines if you're drawing trend lines. If you're drawing volatility lines, draw them on the wicks. But if you're drawing true trend lines, how do we know it's in a downtrend? Even an Elliottician could figure this out. The first failure swing is the first trend line you can draw, okay? The first rally into structure. This is somewhere in time. This is a 1 hour chart. It's a classic situation. Now, it doesn't mean that if you sold here, you could have sold here, right? Imagine all the trades in here and all the bad trades. You sold here, which is a great idea. It was the stop hunt, the banker's level. I'm sorry, it's the banker's level, right? Because they're making all the money because they're running a 5 pip stop, and they're going to make this much. But if they do not get out of that trade, and they had a stop here, like a true goober, at the very tippy top of the day, and of course, you didn't have time to execute this trade. By the way, I highly doubt that you babysat this. Somebody just wrote me an email. Let's see if I can boot it up here. Maybe I'll save it. I don't know. But he talked, I think the essence of it is, I don't got time to babysit this shit. I got time for that. 911 operator check. I got time for this. Well, okay. Did you have the balls to put a sell limit here regardless of Fibonacci? Or did you have to find a fib extension up there and force your fib, right? Now, I could make the fib argument for up there. I'm not stupid like everybody says. Okay, I can do the Tony Plummer fib. I'll start with the 4236 here, and I'll backward engineer it till it makes sense, right? Let me just get it in the ballpark here. So I'll go 2618. This will be one of those 2618 trades. So I'll go down here, hanging off this low wick, and I'll just drag this till like 100%. Okay, perfect. Look how it nailed it, but look how it overshot, right? So at what point do you, if I did it from here to here, people would say, oh, you're doing it wrong. Okay. So look, it hit it, see? But the window here, so if you're really going to do Fibonacci, I suggest this. Put them all in, right? Don't be stingy with it. So inside of this fractal of fib, there lives this world, right? And we can all make this argument. Well, yeah, look at once it got past 100, it slammed into here, right? So it's about the leverage in terms of compression, right? You see Fibonacci, what it's doing here out of the box. This is just out of the, oh, I got too many fucking indicators up here. Okay, so if I just delete everything, start over. If I break out this fib tool, I'm not using it to predict the market. I'm saying, if I put a limit grid in and I start at 618, at 50, at 38, and I got a master stop at 0, as the market's unfolding right now, and your best target is going to be the banker entry, right? So if we're really going to use Fibonacci, what you need to do, if you're stuck with it, if your brain can't unsee it, I would say let's use it for the wick window, or let's use it at the tippy top here. We're calling this is our stop. Our master stop is going to live at the 100-yard line. We're going to start selling the very first cut into the 100%. So our first limit starts here, which is a high-risk trade, right? Because we're going to get in on all limits here and master stop at the top. So we're going to get into a 5K if we get singles here. Now, as you can see, we haven't hit our target on the 423.6. But we can all make this, and so Fibonacci is a risk tool, not a prediction tool. So if we're high density scalpers, we have ticket banks like this. So we're about 3 pips apart. We sell the very rooftop here. Our 100% starts here, and we take the 0 stop to super tight. And now we can trade this top with a completely denser order bank than anybody else could possibly think of, because they don't think like a scalper. And you could, I can't really write a Fibonacci. I can't get a Fibonacci to run like that. So I just kind of have layers upon layers of 1Ks that are kind of logarithmic like that. I mean, I could write the Fibonacci spacing, but the stops would not be a hard stop. It would ride along with the whole rack of tickets. But that presupposes you're going to put in 423.6 pips deep, which may look good on the guppy because the guppy is capable of those kind of moves. But you're using it as a risk tool, right? Because who doesn't want to get the 618 target? I mean, that's the whole reason why they Empower Trading is saying, well, join the 2618 club and get the really huge reversals that the no-nonsense Forex guy refuses to trade reversals because he doesn't think, and so is Wayne, he doesn't think that there is a fulfillment of price, and then we go the other way, and that's why you see an engulfing candle. It only makes sense. The market goes up and down. So at some point, it is going to turn around. It's not going to go straight in one direction. And if you're going to build a position at the market, so the market's down really hard in 1 hour, well, is this going to be a dead cat bounce? Are you buying the fresh lows that go back, say, 1 year or 10 years or 20 years? Don't forget, if the markets keep going, that long after you're dead, there'll be huge, maybe the market goes sideways for the next 10 years. I mean, who knows? You know, it's definitely fascinating to wonder about, are we going to tread water, or is there going to be drama? And of course, that's always the feeling when you're in a trade. Drama is not going to be your friend if the equity swing's disturbing to you in some way. But that's all about size. So when people are saying, is that a good strategy to buy against the market? But you can't live against that scheme. Like, you can't always do that. Is it like good to, take risks, driving with a performance car that you can get away with things in bad weather you couldn't do with it's never a good idea to take unnecessary risk. But if you don't know, okay, can I interweave a scalp on top of a swing? Yeah, because you're going to have to play scalp banks that live at hot spots, and they're only good for this one-time tripwire. For you to maximize that, you would have to look at the market every 4 hours and say, okay, is it time to put a rinse and repeat order in, or should I just wait for some? So you're either going to counter trend trade it from the standpoint of, you're either going to think about selling above you in the future from the moment that you are thinking about trading. As you're staring at the chart real time, is there a trade or not? Well, that depends, because if you are going to buy 3 pips deep, for some people, they've been told, well, no, sell 3 pips below you on a confirmation breakout. I only want to get filled if the market's actually going somewhere. So it's the entry technique that's psychologically important, because unless, of course, you don't know what that is, and to somebody who's never traded before, if you never showed them another entry style, they wouldn't even know that market orders exist. This is kind of the thing that you can do if you're trying to have somebody work for you that is not curious. They're a better employee because they're not going to say, well, Jesus, why aren't you doing this? And that's why it's good to have people that aren't too demanding or empowering work for you, or work with you. Because I think Lennon and McCartney, if they were both on the same page, it's a really bucking head situation. And of course, the trick is to be both people. That you're able to be a passive trader or an active trader. Now, passive trading is going to be limits and stops entry. But active trader or somebody that's saying, no, in this moment in time, this is the best idea in the world. Or a strategy or direction choice. You're either, when you go in at the market, you're saying that this moment in time, this is as good as it gets. So you'd have to split your ticket because it's never as good as it gets. It could get better or it could get worse. The reason why you buy now is because it could get worse. It could go higher. When you watch the tick chart on one instrument and you see it cut into weekly lows and take out the low from 2 weeks ago by 10 pips, take a look at that. Take a look at the tick chart during that situation, and it's very scary. Tick chart looks like the end of the world. When the dollar against the yen was dipping into, it's like 2 years ago. I thought I'll go trade. I'm getting bored. I'll go trade that dollar yen. And I was like, holy shit. When they started making fresh lows, I was like, I'm out. I can't fucking focus. I mean, the tick chart looked like 3 years of a 4-hour chart. It was so much, there was so many nooks and crannies to it. And if you were watching it real time, it was just insane, because it kind of pulled you in. The volatility was so static that you thought, wow, I've got a fucking order for that. But it turned out that it was so jagged. And once it starts to slam down, I don't know if you've ever watched this real time or slam up, but it's such a jagged ride. It'll just go 8 pips, a 16. Now, meanwhile, you're in it, right? So you're talking $500 down, $800 down. You're like, wow, that's real. I mean, if you're in, like a standard lot on the wrong side of that, it's going to be kind of tough sledding. You're just like, okay, I see. Now that's when you immediately come up with the idea that you're going to back away and give the market some room and not be the guy that's the decider. You don't want to be George Bush every day. I kind of drifted off of my scalping thing, but if you can imagine up here, I was trying to fix the scale so I could hunt down this scalp at the top. I was going to talk about Fibonacci risk ratios, 0 being your master stop, which is well below the 100-yard line in this very narrow range up here. And maybe you're going to take even less risk and you're going to sell your first ticket at the very top of here. And let's just imagine you have a 100 pip stop. So you're going to sell 5K into that. Your targets are all predefined. And you actually make your, in one day, this is a 1 hour chart, don't forget, if you sold this Fibonacci window. So this is how I would use Fibonacci if I was going to use it. I use it as a risk tool. These are all tickets I would fill. And if I filled the 0, right? So if I filled the 0, you could write a script like this. Pretty close to this actually, but yeah, I'd say you could probably do. Of course, the stop's not going to be a master stop, but you could write this very easily. You're going to say how many pips apart. You call out the pips apart. You open up the limit grids and you say how many pips apart. And you drop that. Or you're going to drop singles like this. It's probably easier at some point to summarize these into a easy drop. Now, here is where it gets interesting. If you've got this scale fixed, you can see how you could have a scalp bank that literally starts there sells everything up to, I'm presupposing you knew the top of that hour. And look at the ratio here of entry, using this as your expansion, you're making 4 times your money. And you actually make 8 to 9 to 10 times your money here. That's a good trade. That's the bank level up there. Now, you could have some robot that's going to pick out the bank level, but, don't forget this was the other bank level here. But now you need a wider sell grid. But I think you made all your money back on that. Look at it, made it from here. If you omit this other stop hunt, and this is just like the gust of wind, don't forget I'm actually zoomed out. I went back 2 months earlier, and this looks just like the other scenario we see where you need to start thinking about sell limits here. Forget Fibonacci. I'm only using that for risk tools, so let me just turn that off. But some of these tools are misused, by the way. Stochastics is on a dirty dozen, but if you know how to trade it, I could show you really easily how to make a bunch of money with it, because if you just do the Cardwell's technique on RSI and apply it to stochastics, it makes total sense. Very easy. But, people don't know how to trade it. Here I look at this right now is if I was in this, I want to have some kind of position where I'm long here. I have a buy limit here. This is my first scalp. This is all pre-done. Like, in other words, aggressively, I'm going to have buy limits here. So if I fill this whole thing up, so as this is dropping, I am going to buy at the market here if I happen to be there. So this is why you need limits more than market orders. The market order entry is just kind of, oh boy, this is beautiful. And if I have limits here that got filled, but guess what? They didn't quite fill this one yet. So I bought here maybe at the market, not too much. And I only buy when the market's going down. So when the market's going down, I'm buying it. So when I say against the market, I'm saying it's down a little bit here. So I'm going to buy a 3K down here at the bottom. So it's only 3K, or it's maybe this is a 10K buy, a 10K buy, and a 10K buy. I will not buy this rally. I will not buy this rally. I might buy this sell-off and this one. Now I'm in a 40K. Plus, maybe I got filled on buy stops that I have trailing here. And it's not the greatest trade in the world, but that's why I'm always going to scalp 5, because I'm in the Eurodollar. I can take 5, 9, all the way 1 pip apart, profits out. So I'm scaling out as it's gushing down, and I'm scaling in as it goes up. Now I got buy limits that start here, obviously, right? We all know that once it gets past here, that's going to start plummeting. We're back at 115, where the other thing are at like 123. So this is about 3 months before the half-hour playback of the market. So this is interesting. We have no other history than this right now, and it's going to come down to dollar risk, I think. I don't think much about pips, because I know that if 50 pips down here, if I start, here's why I use the Fibonacci tool. Where's my first entry? Is going to be at 61.8 fib. So I'd go like this. Okay, and the floor is going to be, the first exit's going to be at 100 of the floor, previous floor. So I'm going to start buying 618 all the way down to the 0 line. So the robot, I don't know if the robot bought or sold here, but so I'm not long yet. Well, maybe I buy one here at the fake breakout. These are fake outs, not breakouts, son. But yeah, down at the bottom here, we're definitely, and don't forget, maybe I'm still long on stuff I bought here, and I'm so waiting to cash out like everybody else into the, there's like a triple bottom here on time. I'm trying to stretch this so bad. As it paints here, let me try to treat it like a real market. So a lot of people that have bought these new lows are going to scalp out here, and it's not as easy to see on the 1 hour chart, but any kind of bounce into that is going to be, the scalpers will be out. You can kind of tell. the short-term people, and just, the market's satisfied that fresh low, and so the retreat. I like this part of the market because I like the brinksmanship of it all. Actually, every hour I could buy this. So at the end of this hour coming up, I'm going to speed it up a little bit. Luckily, I've got a little headroom on this playback, so I'm going to take it up to pretty quick. I think we're one increment from maxed out. For some reason, the max out now is like some weird 32 or something. So I'm going 31 is pretty fast on here. Okay, so the scalpers got out, and then people like me are cashing out right about now, because as soon as we take out the high from the previous hour, don't forget there's a bunch of money management stops there, and it would be a stop hunt for somebody, that didn't get out here at the insane new fresh low, where this is obviously the entry window, is the very edge of the market. Just like this one was here, and maybe you couldn't get filled on that ticket, but then there was this glorious entry here, went right back up. So on the 1 hour chart, you're kind of waiting, you're kind of waiting here. And of course, if I zoom out just one notch, to me, it changes the whole picture. Okay, so we can see the bankers got in, right? The banker entry is basically the deep discount auction sell-off kind of offering up. Now the sellers just came in. So notice the sellers just came in here, backed off. They trapped the breakout traders. And here's the moment of truth again. Do we pause into this closing structure? The good old line chart. I'll give it a window from, I'll just look at the most recent, right? The most recent low in time. And here is your other kind of currently important. And then we have this point. And unfortunately, you have to keep hand drawing this as time goes on. I guess you get a jigsaw to do it for you. But this is all that the market matters on the 1 hour. And 1 hour is not bad. We're not going to buy anymore. We bought the last hour in the close, or the robot hopefully bought every pullback here. Now, I would buy with a wider stop. The more it's down, the wider your stop needs to be. If you think that you're building a position you just want to get like, oh, it's down. Now I would not buy at the market anymore. And if I wanted to, I would add limits here now. If I didn't think I was in big enough, I'd add limits here, because we're probably going to take out that, right? We don't know that. And maybe I did scalp out a little bit here when we trapped the bulls on the 1 hour bar, right? So this trap thing, these fake breakouts are going on all the time. It's a pretty clunky, simple thing, low volatility out of Asia. Here's kind of a trap where people get, you're really just having to buy the low and sell the high of the day. It just sounds so stupid. And certainly here we're near the big round number again. That's the 100-yard line. I don't think that has anything to do with, like, you still have to, right now this robot, the breakout bot's losing money because it's sold and it got trapped in here. Plus you can see what the robot's doing and not doing properly. I'm going to go for max speed now. Getting anxious about it. So I just want to, go through this 1 hour chart quickly. I do have buy limits sitting here. I could get hammered. I don't know I can't look left far enough. I would buy all the way to the 50-yard line here's the thing. Are these orders going to last for 4 hours? Okay, then if that's true, what we know here is this is 1 hour, right? That's 1 hour, and this would be 2. You can write a 2 hour script, a 3, and a 4 hour, a 6, a 8, a 12. So here's an 8 hour script. I'm going to put a buy limit grid here all the way to the 50. I just started getting filled, so hopefully, the white line has to come down into this hole for me to get filled. But like I said, my market orders are still in there. the fear of missing out has completely evaporated from my mind because I force myself to trade small at the market. I don't force it. I have to trade small at the market because it just makes sense. Like if you're driving down the road, even if something you don't need, you're going to be like, really? Half off? Okay, I'll take a few of those. Don't even fucking want them, but you know, hey, some other fucknut might want them later. Okay, so here we're starting to reject. We've reached unfair value. The scalpers have just dumped out here at the floor. A lot of people. That's why there's a big pullback off that. Now, if you're going to hold for the swing and you still have other shit you can cash out once we start to cut into these prices, right? A lot of sellers there. Big reaction there. And it's just not, I can't imagine trading one thing anymore. I just can't. I'm like, just making one decision is just too overwhelming. I would not want to ever be like having one employee. Where's the diversification? Where's the power in having one person think one way? Some people are, look at this thing's actually in a winning position with a fucking money man. See that pullback off that, how that was? It almost gave up half that fucking bar just before the close. So as you're coming up to the top of the hour, there's a 5-minute window before and after the top of the hour. If you watch a tick chart, you'll see drama 5 minutes before and after, because those kind of 5-minute robots are all, everything's coming to a climax, right? I mean, in other words, the 1 hour traders are completing the 15-minute. Every time frame completes at the top of the hour. The most amount of time frames complete there. The 1 minute all the way to the 60 minutes complete there. That's why the 60-minute chart's kind of like easy sledding. Here we're coming back into the limit banks. If you did not sell this rooftop on a scalp, then you're just not that guy. But see the reaction up here? The very tippy top. Why does that reject so hard there? Okay, because that is a very, this is a hot spot. I don't know how to put it any other way. If you fix the scale, this is bid, so you know you got filled on, or I guess you didn't get filled on that. But boy, you're really close to it. I think if you had your sell limits on top of this thing, right here on this rooftop, you filled that. And if you had a stop just beyond that, depending, okay, now it's getting all ferocious. But see, when you're looking at the market like this is what it's like when you're in a really big position. That's what the market looks like. Very scary. If you're in a big position during this, you'd be like, oh, dude, could you zoom out a little bit? You're scaring me. Like, can you imagine you're in 500 standard lots and the market's doing this shit? But you're like, you're normally looking at the market like this, like you can't even see that. You're like, oh, let me see. Oh, what do you trade Forex? Do you? Let me take a look at that. Okay, so here's the chart. And then you're like, okay, that looks kind of dead. Like I've seen people's charts like this and I'm like, how many pips are you trying to make again? Like, just think about how this is. Are you kidding me? Like, I sound like one of those sobriety. Are you kidding me? I'm being pulled over? Okay, switch time frame. Sorry. We're stuck on the 1 hour. All I can do is zoom out. But seriously, scale matters, people. See the math's freaked out here. The big cloud. I think I have a simple moving average on there, so it's able to do that. Or it's exponential maybe, so it's going and taking into account the very first tick that ever was. So it depends how you frame this, I think. And of course, this 1 hour chart is really flying by. But I see structure as the most important factor. Did you buy that new low? Okay. Then you're obviously a guy that not only wants to trade it back to the breakout point here, but you want it to engulf at least into the middle of, so we're coming in Asia now, and people are selling here. The noise floor is low enough. People are buying here, and now I have buy limits that start from this wick all the way down to Memphis. So this is the beauty of not having to babysit it, is that I'm just going to throw a bunch of fucking buy limits on that. It's the euro dollar. So what I can do is check in on every hour and say, oh, I only buy when it's going down. So I would have bought there. At the end of this hour, I would check in, or a robot hopefully is going to pull the buy at the market trigger. And the deeper it goes in 1 hour, the more it's going to buy at the market. So I'm buying at the market here. At the end of this hour, almost guarantee, because I can almost guarantee you that we're going to finish this hour down. But watch the last 5 minutes of this bar. Did you see that? Comes up, bam. So, there was a big panic there, see, to buy at the end. Like there's almost a little bum rush, but those are the 1 minute, the 2 minute, everybody all the way to maybe even a 2 hour chart, right? Depending on your platform, the 3 hour charts technically are updating. And here we go, new low. So you see the scalp, they jumped out, and now I'm getting filled on all limits all the way down for the rest of the day. So I go on a campaign. It's called by Wyckoff as like a campaign. I'm just going to be the guy that buys. Oh, and I just got filled really heavy here on limits because I put more limits at the new day low. And so built into this is the scalp bank. It starts right here, right? So this is like a big iceberg scalp bank, right? And when it gets to here, I got to get out of at least 70% of it. Now, that depends. Don't forget, I just bought at that last hour at the market, boom, and I bought quite a bit because look at how far. So I bought 2K. I bought this big candle and I bought this one. I bought more here than I bought this candle. And I was already getting filled on limits, and everybody's going to bail here on the first scalp. There'll be a huge reaction there. And then I hope, see the end of the hour, how quick that was. It comes up and then bam. So this is there's actually only 5 seconds between the end of the 1 hour bar and the next bar. So when people talk about zooming, everything you need to know is right here. You don't need the 1 minute chart. You can see where, I don't know if you call it big money, but whatever, auction money, smart money, how this thing came flying back and then boom. And now another. So don't forget, I bought here. I did not buy there because technically it was up. I did not buy that last thing. My limits were getting filled. And of course, once I see this thing, I'm only going to buy if it's down. So it was slightly down there, and that's a hammer, right? That's a hammer. And I would have bought that. Technically, I could say, you know what? It's about to break out this bar. This is a very small bar. We've trapped the breakout traders on this small bar. I'm just thinking about the people that are losing. On that one strategy, I'm thinking about the worst trade that you could put on based on what just happened. Now, I'm waiting for this bar to close down. I will pull the trigger and go long irregardless. And I have added more tickets down here to buy. I'm buying for the next 8 hours now, all the way down into the future. So now if these orders lasted all day or all week here, I could add to that. In other words, if you start off with your initial entry, it's going to be I'll buy everything from yesterday's low and deeper. Now, this sounds like a pretty crazy trade plan because it's just too simple and it's too disturbingly simple. But don't forget, if you put sell limits up here and they never fill you, you have not taken on any risk. If you decide to bracket a narrow range with buy stops and sell stops and go full return retail trader, you only get felt on the sell side and you're making money like a retail goober should, but hopefully you've got buy limits to capture, or you realize the buyers are coming in at new lows. Those guys. Not every banker has the same, if big banks are trading it, well, they're trading, there's breakout bank traders and there's limit order bank traders. It's all happening, right? It's not that the banks, like the smart, there's no such thing as smart money. It's just money. And I guess if you mean you pick the right strategy for the right market conditions, okay, that's smart money. Look at this engulf here. So we just took this floor out pretty hard And the whole time we've been going down here, we left this this looming vacuum behind. And wow, everybody just cashed out there. You see that? Now, top of the hour's coming. And interestingly, you know, that's going to be that whip at the end, which is that 5-minute window. And there's a 5-second window. So the bars actually they're not like 1 hour bars. They're just 5 seconds under a 1 hour bar on most systems. And even in playback here, I think. So look at this pullback. We have not completed that hour. Look how they just came in and took all that pressure off. And here it comes back down. And here comes the true trend traders that can draw their first trend line. If we close here, that's your first Elliott wave. 1, 2, 3 should be the biggest wave. So that was wave 2 there. And I could have bought that at the market. And now I would say, if I've already got limits here that have not expired, I'm going to say, okay, well, I'm going to put an isolated module here. You really got to outthink. It's not that you're trading against other people. You're trading against what you can't believe is true about the market, is that you need to buy down at the bottom and sell near the top. And people say you can't pick tops and bottoms, but that's not true. You can pick 10 tops and 10 bottoms. Why would you limit yourself? Once you discover you don't have to trade a standard lot. Now, I get it, you know, if you don't want to go through the effort, but how do you reduce risk is to make everything at home first. You make a prototype. You don't go and fucking come up with some idea and then make 1 million units in a factory that you can't afford it to be produced. Anybody ever watched like the Shark Tank? You got to make a homegrown fucking version. You've got to have, I mean, more like Architect Tank. You've got to have a mock-up. You got to live with it. You got to say, okay, yeah, I can see that. Look at this thing come ripping back in 1 hour. The trend traders just came aboard the 4-period cloud here with a narrow range breakout bullshit. And then, of course, here's going to be the ultimate bailing zone. First, we got to get past this wick tip here. But yeah, the 1 hour chart is a little more creeper gear. I got it maxed out here, but I got so much math going on top that also what you can do is slow down the playback device to whatever, and then just go watch a movie and come back and see if you're right. If you're going to be a big swing trader, put up the 4 hour chart. See how you do. Like, I'm just going to say, if you really are serious about trading, you should just be running the strategy test. Like, if you've never done analysis and you're like, I don't get it, what should I do? Not only are you going to trade a demo, but you're going to take the simulator and you're going to do, if you really think fibs work, you're going to put them on there and let it unfold real time and see if you're right. Oh, man, did you see how that last bar just ended? When it went bam. Now look at that thing cut. It's going to rip, dude. It's going to rip out those tops and come sucking back. Now, it may actually take out for 4 hours back now. After it pops up, I think we're going to pop up here. We could turn on a dime at structure levels. You can just turn on a dime. Once you come slamming up into this, it be complete, the actual wick low here, right? Right at the round number. Crush up. We've seen this before. Crush up and then bam, come flying back. Now, if you're not scaling in and out of these things, man, you just are not smoothing out your equity swings enough. I mean, for me, I can't be looking at that shit. I don't want to be seeing some insane drawdown. Now, this guy also emailed me saying, oh, I don't like the idea of a drawdown. It's not that this black and white thinking is just, you can't live like that. Now, it's not good for a perfectionist or somebody that says, no, sorry, man, it's either going to be this or this. I'm not flexible. I don't want to be you want to be yourself, and you also want to be congruent and always be that guy. But you almost have to see the other side of the trade and be the other guy. Partially, right? So you're being a partial. Now look at this thing rip up here. We all know that there's going to be a huge reaction right here at this price level, right? Into this bottom wick, bam. And so I'm out right there. I'd be out And now I'm throwing in limits. Now here's the thing. Depending how big I'm in, now I got limits trailing behind now. I got limits still here. Now I'm going to cancel maybe these limits down here and delete them. I'm thinking I'm not going to fill out my platform. These are now defunct. And here's where it's kind of destroyed, so to speak. Oh, well, I spent all that time putting, geez, thanks a lot. That's why you want to maybe write a double click. The canvas is an area, and you know exactly what's going to happen when you hit that button. So it's a predetermined, like if you were a DJ and you had some kind of sounds in the background. Now here I'm getting filled on some of my shallow limits because maybe I cashed out, which is the only logical thing to do at this bottom is just get the fuck out. Even though they overshot the runway, but you can make the argument that this is the most recent low, and that's why the reaction is almost perfect here because of the fact this is more recent. That was the floor that really did fall out, and then we took out this floor. Now I'm running trailing buy limits just because of structure. I'm not really saying, well, the cloud says we're uptrend, start buying, but I'm definitely not going to buy at the market. Maybe this one, because this is a hard pullback, but this kind of drifty shit, or I'd buy this one. I guess if I'm going to be a disciplined trader, what I'm really going to do is buy this one. This does not break a rule. You're buying the pullback in the cloud like a fucking goober. These are also goober trades, which make a pile of money if you keep rinse and repeat. You buy this one, you buy that one, you buy that one. There's no other buys in here. And you bought the first pullback in the structure where the cloud turned, right? 1 hour chart. Now you're coming into London again. So Asia popped like a giant whore there. And then we get this meandering stuff. This will be the place to have sell limits or cash out of your buys. I got buy limits maybe here trailing now, and it's getting all noisy and quiet. We could still have a plunge when the U.S. markets open up. We can start putting in buy limits here. But you keep changing your trade plan, or it keeps evaporating as time marches on. So let's say you got a buy limit grid here that lasts all day, and you got one here that lasts all week. You're just going to have to plant the seeds and wait for them. Oh, so now they're filling me. And maybe I did sell up here, but this is why the cloud trade doesn't say, well, I just keep on buying every dip. And if I didn't cash out of this thing, and if I also took the other approach that every big up move I sell, I was just up on those trades. So don't forget, you could counter trend trade it. I could say I sold that one and I sold that one. 2 market orders, both winners if I got out maybe below here, right? So below here is the first stop hunt for those people. So this one's not so much a winner. Now I bought this one. I can't strictly say, well, the cloud, it is just turned blue, and I'm not going to do that trade now. Nah. Let's just say that cloud's only up here for fucking special effects. Ignore the cloud. For most intents purposes. I mean, sure, you could cherry pick a trade, and maybe in the 4 hour it makes sense. But look at this thing rip now, right? So now we're really going to go punish this wick, and we're all selling up here for the scalp. Are we on board with that? All the way up here. These have to be places you're going to scalp out. If you're a scalpist and you just scalp this rooftop, don't forget you have sell limits here, the first aggressives and the non-aggressives, because the aggressives, they filled, you're back, you're cashed out. This is the new fair value. Anything that lives in here is a new fair value. It's constantly changing, constantly evolving, and there is no moving, you just can't put a gauge on this market because it's too dynamic. This is what it really looks like if you just sat on the 1 hour chart. You'd be like, holy shit, that's a beautiful fucking entry, dude. Like, think about if you had the nice cash out points, and you could, right? If you layer this up properly, even using, look at new highs here. We're about to take the high of Asia we're about to take out. We're selling just above that for the scalp. We're long into it, I hope, right? On the limits that we placed here. So you got to keep thinking the other trade over and over again. Hopefully we bought this place right here. Let's hope. Okay, so now we're cashing out of some of the shallow targets. Take a look at that, what just happened there. Okay, the scale was now here. Huge sellers here on the rooftops of these 1 hour bars right there. You didn't fill on this one, but I'm sure that if we go up there, there will be sellers there. Where are the sellers sitting? They're sitting on the ledge. It's big sellers here. In fact, there's more sellers here because see how tight these three. This is a 3 hour. Well, it's a huge resistance zone. That's a hot spot, as they say. Now the other hot spot was down here. Now the new hot spot is here, so it's always moving. Don't forget the hot spot's always progressively moving. We want to buy below that. That's the Lonely Wick entry. And now we want to, well, if we didn't buy this, also we could have bought this because we have market order rules that say if it's down, we can buy. If it's up, we can sell. So we would have bought this at the market in kind of a roughly, probably the 2 hour chart has a perfect yellow cloud. And the sellers came in on this trap here. They could just break out. Now they could crush it all the way back. Don't forget, I still have pending buy limits in here. Scalps blended into the swing because you just can't live on scalps alone or swing trading alone because you just take forever. And this is 1 hour chart. Now, if I zoom out, you can start to get a picture. And here's where you could put on all your bullshit channels and all that stuff. And all it's really telling you is that the market's dropping at a certain rate of change. So closing prices only I recommend because otherwise you have no idea of momentum here. But here's a channel. Here's your classic breakout. I did a video on this. I didn't even realize. I looked back at some of my videos. I'm like, holy shit, the view count is like, pfft. Because just the idea of channel trading, everybody can get their brain around this very easily. Also, in a diagonal support resistance argument, also is that if you break out here, and this would be the middle of a pitchfork, which is just a channel with a center line. If you take this and I'm trying to highlight that so I can copy it. Got to grab this middle node here. So okay, hold down the control key before you grab it, and then you could copy this and say that. Of course, this to me is just an excuse to buy, the breakout point. Because to me, it's about that stop. So we just got filled on the very top of that window, see? I can't back it up, unfortunately. Missed it as I was babbling along, but that was my entry. Is the new lows from the middle, the London new lows, right? The banker's entry there. That's where the bankers get in there. See, they faked you out. You thought it was going to break out there, didn't you? Now, you bought because it was down hard in 2 hours, too, at the market, right? Because you were a bull. Plus, you got in. If you're a very aggressive trader, you bought this beautiful high compression vacuum because it's got 4 wicks that are almost the same goddamn price. And then that's why you get such a vicious fill in that rejection or engulf. That's top of the hour insanity right there. They just touched this bar and ripped it back. So people are scalping that 5-minute window. Look at this that's the 5-minute window on the top of the hour. Look at this come back into my limits. See? You have to have some kind of, and you sold at the market there if you're going to sell your market orders, right? You're up on that trade. Yes, all you did was sell. You have to play it out and see 3 different trades in here. You see your market orders, your limit orders, and your stop entries, which are kind of like, okay, if the market quiets down, we're expecting the market to break out. If you're not, well, if you had a robot that's doing a trailing stop, it's better to think about markets and limits. Stop is kind of, I guess it's okay, right? I wouldn't do my whole trade plan on that. Maybe 20%. I mean, I think ideally it's 80% limits, 20% at the market, 20% on stops, or maybe 10% stops. It's really time for a dependent on stops because you're looking at breakout. On the 4-hour chart, it's low frequency trading on stops. The frequency of trading is dictated by your entry technique. If you're really looking for the market to be down in 1 hour, then it's probably not going to be down 24 hours straight, but it has gone down for 16 to 20 hours straight. I've seen markets that don't have one breath in them in the opposite direction. But it could be dripping down. It could be slamming down. I'm counting every technically bullish and bearish candle, regardless of pit range. That's another thing is you're really going to blind trade it There are people that could probably do good with a very simple system. It's up, I'm buying, it's down, I'm selling. I'm a contrarian. I want to get the best price in the moment. Not to say the limits are definitely going to be the better entry but if you distribute between market and limits, you never have to trade stops, because if you can see the breakout's about to go, you're in the market. And the breakout in the opposite direction is always going to be, it goes up hard, it drifts sideways, you're already sold, you're already in before other people. You are not, there's a fear of missing out for a reason, because you are missing out. But you can't do your whole trade plan on the fear of missing out. I'm just saying. And you have to satisfy that part of your brain, right? If it's only that you can, you just got to watch the market move. And then you got to imagine yourself going through a day of this. Look at this whole day is just chop, right? The range traders cleaned up on this fucking chart. Who won this day? Not the trend traders, because anybody that's long or short, you're at the same fucking price that you opened up in Asia right now. But we know we have a doji on the daily. You shouldn't need to go to the daily chart to know that if you've had a narrow range during the day, you're in some type of doji. Dragonfly, you name it. Spinning top. It's duh, right? And don't overcomplicate it. I mean, open to close. I mean, to me, all dojis are the same. A hammer's a doji. This could be a hammer in some regard. The fact that it's open where it closed, unchanged for the day, that's a big deal. That means lack of closing volatility, lack of punctuation volatility in a 24-hour stretch from swap to swap. And now here comes Asia. Well, once again, another rinse and repeat. The market's kind of blown out my trade plan. Hopefully it's self-deleted itself, and I've got like 12-hour scripts and daily. Buying down here, it's as simple as that. Nothing to do with Fibonacci. I'm definitely buying just gobs down here. And maybe the news is coming out. So you can also delete these tickets. You can put in trade plans and delete them. I mean, instead of cutting your losses short, how about cutting your exposure down? In other words, trading is about inventory. It's not about dumb shit rules like cut your losses, let your profits run, because you've got to plan out these order blocks, these entry blocks, whatever. I keep wanting to go forward chart. You got to plan this stuff out a little bit. I'm just going to zoom out. So we have enough data here to kind of look into the voids now. So we have a looming vacuum above from this point here. This is kind of pending. That's a 4-day vacuum that's been forming now on the 1-hour chart. Get it? I mean, a strategy, a way to, okay, well, there's probably sellers up there. Now I could be a seller. I could start putting limit orders in all the way to this bottom. Put a big trap in there, big scalp bank. Or I'm putting in orders down here. I don't even have to be in the market right now. And then I can say, well, okay, let me sell these very first treetops on some kind of scalp, but maybe it's too much. Maybe I should start running buy limits here. I'll put a buy limit here. This is the previous breakout if we retest there. So this way you can trade one currency. You can have a buy limit here based on that. You know that there's a vacuum here. You want to buy that, and you want to buy like all week long here or the whole next day. Now here obviously is the lonely wick. There's going to be sellers here all the way to this top. It will probably get a fierce, violent scalp, right? And you just keep on testing it over and over. Is that true? Is that a good strategy for this zone? Okay, there's your first cash out, almost to the breakout point. Once you dip in that window, boom, you just got out on your, because this ask made it to that wick top. Now, more selling limits, right? It's got to pull back, but it looks like, see, this is a very looming vacuum. Don't forget, this will be vicious because the next point of resistance is here. And as you cut into that, okay, now the bears have filled up their bucket on sells. Right up here at the very tippy top. See, now you know you got filled. How do you know? Because this is the bid and your orders are, see, look at that beautiful scalp. And you're out. You're out on your scalp, right? Now, maybe you're trying to swing trade it all the way back to, or maybe you think it's coming back to here and you're still holding partial position. I don't think I'd want to hold it past, okay, they just stop hunted that last hour, so I don't want to be totally flat right now, honestly, even if it keeps tanking. I like to go flat at that moment because then I've got free margin and I can come in like this now and say, you know what? I'm just going to put fucking more buy limits in here because I just padded the account. Now they're coming into my buy limits. But see how that engulfed all the way back to the here? It gave up 4 hours of work in 1 hour. Plus, I'm going to buy at the market here because it's down so hard at the end of the hour if I get a chance. But see how that worked out. I filled on limits, and I rarely buy at the market because what's the better trade? And what's the one that you'll never miss is the limit here to buy if the spread was tight and cash out in just some kind of pimp manner, doesn't matter. Now that is the opening of London and Europe where supposedly, once again, the bankers have sold the previous high of the day. The bankers, you know, those banker levels up here. That's right. That's why it goes back off of that. And then we come and try to hunt down Asia, but we don't quite do it. But we do come back to this 2 hour floor right in here and just boom. Now, hopefully you've cashed out on something because at any moment we could rip back, but the impending void goes back quite a bit of time now. And this will feel very quick and dirty. We want to start selling right here where everybody sells and watch it pull back off of that. So this price action in the, like, oh, gee, I wonder why it's going up so fast. I don't understand it. Because I do think of a vacuum as filling very quickly. Look at that. Wow. Man, that's some fast fucking money. Look at this buy. It bought a 20K and it's got a trailing stop. Watch it stop itself out. Gee, I don't know how you made that much money in 1 hour, Jed. Look at that. In 1 hour. Oof. What a vicious move. Look at that. Right at the top of the hour, it's closed right up there. Now the bears are holding and look, it hit the floor. Dead on. Last known floor on the 1 hour. Going back into that hole that's been pent up demand for 3 fucking days. Look how fast it fills. Yeah, because it's got vacuums fill very fast. It's like when you open up the plane on the window. The plane on the window. Don't open the escape door on the plane. And look at it come ripping back. So at this point, I'd be flat on my sell scalps. I'm not looking for it to crush down and swing trade it, so I'm going to zoom in and try to scalp these, try to buy into this pullback on the 1 hour. And maybe I bought a little bit at the market there, but it's one of those things where I think the biggest thing is to start putting buy limits down here for the rest of the day. Okay, boom, we just got filled on the top of that box, and I have enough money to buy this whole thing and just not give a fuck. They're filling me up right now. I just don't want to be I don't want to be the guy that has to babysit these fucking I'm over it. I see a top like this. In fact, don't forget I had buy limits all day long here that I placed here. Just huge tickets. And I've got buy limits here. And I'm going to do the stop hunt. If you've got a stop here, I'm going to buy it off you. If you got a stop here, I'm going to buy it off you. I'm going to buy all your stops off you. Don't worry, I got you. And it just went down hard in 1 hour, so I bought one at the market. Now they're coming into more limits. Okay, look at that beautiful reaction where they just took out that just by a little bit. And I've just scalped out of 50% of my position right now. Right? And that is the floor of this 1 hour bar here. So I'm talking a few bars back. I'm not going back to the beginning of time. I don't have to. If you saw the reaction here on that, it's like 2 bars back. And vicious. Look at this thing. So look at the top of the hour. The thing closed right at the top of the hour. Now they're going to crush it north. To me, I start selling here. First scalps. Look where you're at in the larger context. We still have this tippy top here where we have a ton of sells there. we could be flat to market right now. So we have made all our money for the day, and then we could just go to sleep and put sell limits up there, buy limits up down here, and just call it a day. Don't forget, we still got this uncharted water here we could retest. And on the sell side, I would have like just serious tickets up here that last seriously a long time. You know, and so it's about projecting out like here, you're going to sell. I just wouldn't limit myself. Don't forget, down here, you're going to buy like ungodly amounts all month long. So you don't have to place the orders now. But you could do your, and this is not so much analysis, it's just order preparation of where I would place orders manually. You could also go in here and right mouse click and throw in sell limits all day long. Not on the playback of the market, but it's not even available as a choice. But if you right mouse click, those are sell limits. Down here, there are buy limits. Look, we're about to take out the high of the day. We'll get a big seller reaction here. I would scalp into that. We can see the first scalp get pulled off as we pull back to the breakout on the 1 hour. And here comes the buyers coming back in. The confirmation traders are jumping on that. And it's just very quick, man. I mean, the one thing about these vacuum trades, they are quick and dirty. And you just can't say, oh, I'm going to hold on to this one because the intensity. If you're making that much money that quickly, you probably want to peel something off the table because you're going to lock up a bunch of margin for a creeper gear drift out of that now, right? You think climax. I mean, if you think it's going to keep putting out, like a robo hooker, it's not. Right? Now look at that. People scalped out of that pullback, and there's more sellers all the way to this, going back 5 days, which is a weekly bar. But this isn't. You have to start moving your sell limits up. So you're trying to catch a falling or stop a rising balloon, I suppose, instead of catch a falling knife. And you're trying to keep on putting barriers up there, and those are your limit orders. So here's your first winning sell, right? You're up on this trade finally. You sold that top, and they broke out, and they've pulled back deeper in, and they've taken. They come back into this. That's deeper than it came on the last one. The other one just took off like a horse. So right there, you cashed out to the closing prices. And now on the clock, here you're buying at the market if you're still bullish. Or you're getting out, right? You're kind of going to get out because the buyers are coming in on any pullback they get their hands on now. As it looks like we're going to keep on cutting north into the Asian session. Maybe we make it to the 100-yard line, or maybe it's like a struggle. The last time for this to make a stampede is about right now, depending on what's going on in other things. Of course, like I said, taking money off the table along the way doesn't hurt either, because depending how you look at this, if I can press it down, I'm looking at about 300 pips on the screen right now. We're in the middle of the road of that. There's sellers up above us, and we know there's buyers below. It's that simple. It's what's the density of orders you can place. Do you want to go pure limits? I mean, that's the ultimate pure limits. Like, where to place them and you walk away. But you're not able to retap that zone, because what if your limit orders were sitting down here and you bought everything that was below Asia? You had 3 chances to do that same trade. And you could have built a position long here, accumulated, and never let go of the buys you bought in that range and build a huge position in anticipation of this vacuum filling. So one day you could go on this sideways where actually you're running tighter stops. And this is why this move is so brutal out of this narrow range, is because people have accumulated here. And as soon as we get that first run, there's the kickback, and then it launches like any range breakouts situation. Here's the range. Finally, we get that last kick out, big move out of a range, right? Anytime the market goes sideways, it starts to build pressure on either sides or lack of pressure. And so that's what you're looking for. Now I'm getting filled on my limits finally. And the bears have done a pretty good job of selling these highs there. And here's the moment of truth. Are we going to start dripping down and stop hunt people back? Well, if I'm flat, I hope they do take it down. And I almost guarantee you they at some point will come into this area. It seems a very fragile trend here. It's very old, long in the tooth. And this is also Asia now. So we can have stuff wick into this window here. And then the sell side, this is where I get nervous about having too many sell limits too close together now, because also we have a void above us that's very looming. Because what it is I see is this. From this wick to here is quite a shelf. So that's what I'm looking at now. If we take out this top from the previous day now all the way to there, that could happen very quickly. That is the looming void above. God, if it wasn't for Wayne's World, I never would have thought how great of a term that was. It's great when people criticize you, because then you're like, oh, I like that. Yeah. A guy that asked me, so a little less joking, you sound like the song by Elvis, a little more of this and a little less of that. Hunk of burning love trading, I think, is what he wanted. But you just got to figure out what you can. If you can't be awake 24 hours, then you're going to have some kind of limit system entry. It doesn't make sense to place a buy stop 20 pips above, even if it is a fucking winter record and you're back testing bullshit. In other words, if I put a sell stop here, okay, I got it, right? It made money. Because you are trading into the vacuum, right? You're accepting that. But what if you put so you perceive this huge vacuum and you said, well, I'm going to go on a buy stop entry, put a buy stop here, I'm going to put one here. Now, some of these with scalps built in would work, right? But it's not until it takes out this wick and that you actually make money on that. And don't forget, if you don't get out, it comes all the way back to the starting gate in kind of a cruel hoax, right? It breaks out and it rips all the way back and gives back all that work. Now, here's a classic trend. Buyers have come in here on this little mini stop hunt, very subtle, and they're trying to accumulate long here in anticipation of this void that's looming because it's yesterday's high. We could still have a raid. I'm still a willing buyer here. And here's another 2-hour basement, because these are so close together. There's a real huge turn. Okay, now I'm going to fill in my limits. Now I have to cash out of something here at the last known entry, the Lonely Wick. Boom, you're out. Right there, you're out. See, and everybody's out. See, at the end of the hour. They squeeze it right to the end. Now you're getting filled on more limits. And now you're really going to load the wagon down here. Like, it's not going to feel comfortable at first, but you need to be a heavy buyer here. You don't have to watch it happen either. So, you knew this area existed before anything else happened. So what's hard to understand is, I get used to the fact that you've got buy limits down here that really never filled. Only that very top one, if the spread was even tight enough. But you also had buy limits here willing to buy this, and you can put those on before you go to sleep. So if you're going to sleep at 5 p.m., and you sleep until, you don't have to be there for London Open, because you know the trade plan, what it's going to be. You could already engineer it, that if you buy anything below here, right, you've got to cash out to the top of your first ticket, which you did. And maybe you're going to load with real long targets here. And here you just took out the high of the day. The scalpers come in, they pull it back to here, or maybe not. Maybe that's all you're going to get. But, okay, the scalpers just got out. And look how that's just before the bottom of the hour. Notice how that is. There's a 5-minute window before and after the top and bottom of the hour. The market is, it's not necessarily algorithms either. What it is exchanges are closing all over the place and opening. And stuff's done on the clock. Like, what is that, right? Okay, and look at this volatility heating up. Don't forget, there's people getting out because it's getting too fucking crazy. This is Asia. This quiet session. So you could say, well, I was trapped short here because I got in like too big of a goober. I went short, and then I confirmation entry, and then I put a stop here, and they chopped me to death, and I lost the window here. I had a hedge on. Yeah, because you can't just have that trade. You could have it, but you still got to buy limits here. You got to buy this hole in the floor. You've got to. You got to buy here. Just do it. Try it. Now, people say to me, I keep losing. Yeah, it's only because you're getting too big here and your tickets are too close together. There's not enough money in the account. And you also don't have another trade plan, which is called, if you happen to be awake for these trades, that you're going to be forced to buy at the market if it's down. Buy at the market if it's down and down. So you're long 3 at the market. Sure, you got filled in limits. Did you cash out of some of those into the new high of the day? When they took out the high of the day, you had to go short. So it's a lot of work because you got to have a sell tickets here, and you have to have buy tickets here to trade bookends, buy to sell zones. And now you've got buy limits to go here and here and all the way down again, and your sell limits are still going to sell the high of the day. Constantly changing your trade plan based on what's happened. So this is the new high of the day. You have to have sell limits above here if you're a scalper for the mild kickback trades, and here you got buy limits for the kick to the floor trades. Or is this going to be an engulf continuation, or is this the top? We're going to see this is the top of all tops for the next 3 days, and it's going to start working its way here, and then we're going to start selling at the market on every rebound. We don't need an overbought and oversold indicator. If it's going up, we know it's overbought. This is where you can eliminate RSI and all the shit from the bottom of your screen if you just look at closing prices, right? It was just painfully obvious. So a narrow range breakout, 3 hours of nothing. Here comes the goober traders and the breakout, just the good old fashioned. Even the robot got it right here. Once again, pulling back to the breakout point, the scalpers are making their high probability money now. It looks like we're just going to blow north right to the 100. Once again, this is the looming vacuum is here. We're going to have just a pile of orders up here to sell at the market. We don't even have to think about that trade. It's so stupid easy. Not to mention all the people that are cashing out right now because they sold everything above the high of the day. I don't know if they're going to make their target back to the breakout point on that. But it does happen more often than not. I must say, when I think they're never going to make it back to here, I think they just did. Boom. So, and it bounces off of that for a reason. That's why you see that bounce there, because of that top. This is where people are even on the account. Now we're going to go. Now it's, okay. That technically is a pullback on the 1 hour, so maybe you buy there. Right? That's a trend trade in the cloud. If it's down again, you have to buy. If it's up, don't buy at the market. Maybe you did buy quite a bit here on limits, and you cashed out everything here. You went flat at the new highs. You didn't necessarily have to buy this pullback, but you could have gone flat to in to flat and build your account, free up some margin. You can trade slightly bigger next time around. Once again, I got my buy limits trailing in this pocket all the way back to here, and I don't know what's coming out. We could all of a sudden, if news came out, we could smash all the way down here, or we could smash all the way up, and go hunt down this wick up here. So unfortunately, I can't play the market back much faster than this. But yes, test your grit here. The buyers are coming in at structure here. Also, I'm buying in the cloud at the market. I would have bought this inverted hammer in this one. If it goes up here, no buy there. So sit pat and just wait. And then we can also, if we don't think we're in big enough, we can run some shallow buy limits here. It's just about position sizing. It's about this Goldilocks. So you got to get the sizing right. This isn't a bad trade, but when it comes to here, we know there'll be sellers here because this is just an insane, unfair wicking into the top of this wick. So that's the first attempt. We can sell all the way to here and beyond now, faithfully putting in limits without even giving a fuck. In fact, we could put those limits in 3 hours ago. Another thing that people don't think is possible is that we could just place these orders here and walk away and sell the new high of the day for high probability reversal. Because we all know, even Wayne admits there's sellers up there. Gobs is sellers, although he doesn't want to be one because he doesn't think about putting in more than one ticket, because that would just be, that would deny his moving averages. Or what they say in power trading is that it negated our signal, so we didn't trade it. Okay, dude, you know what? You got to learn how to fucking live on the streets a little bit. Like, if somebody's, oh, look at that, vicious. Wow, that was pretty brutal. Did you see that? Right at the bottom of the hour there. So here we come into Asia, and no fills here, and it can get quiet, you know. And you put on a different strategy now. So your strategies change based on volatility. Anyways, it's time to go make another. I bought some terrible sandwich meat. I feel like I should, because I keep hearing this ad on the radio saying you should save food. It's some British guy. I can't understand what he's saying. Look at the coming in my limit orders here. Boom. Hey, look at the robot just sold. A little late, robot. But I feel a duty to keep my carbon footprint. And I saw the New York Times. My friend at the coffee shop buys New York Times. Guy's 87 years old. Give him a break, right? And the headline in the New York Times is about climate change now. So you have to keep going to these psycho narratives like there's a bat wing on the 4 hour. I wouldn't even get near that trade. The idea that the climate change is an issue, dude, I'm just trying to make it through the day without punching somebody. Come on, give me a fucking break. You start thinking of a happy pill or something you could design. I don't see this robot moving this order because I think it doesn't do any trailing stop unless it's in profits, and right now it's getting killed. It's getting killed at the structure entry. So yeah, they came after my buy limit. We finally got filled here for the first bounce into this wick, and now are we going to hold for the engulf rally? Yes, I say yes. Now they're coming after fresh territory into London. We know people are going to be selling heavy in this window now. It keeps changing. As the market unfolds, we have different places to move our zones to, and it's a lot to keep up with. I mean, one currency is enough for anybody. This is a fast playback on the 1 hour, though. Okay, they're coming into my limits now. If they can just pull it down and take out that low from Asia. But sometimes they don't, so this is why I would have bought at the market there at the end of the hour, because they closed perfectly and retested this. We now have a plus it's a confirmed double bottom, right? As soon as it's down here, hey, you know what? Could be a double bottom, buy one. How bad can it be? Never commit your whole trade plan to one entry technique or one direction, and this is why hedging, at least kind of scaled hedging, as opposed to, well, if you could put out a hedge and ride it for 100 pips and take off a leg and ride it back, that's, formally that's grid trading. So they just filled me on some more buy limits, and I got just a huge vault. And then right down here, I've got more buy limits than you can imagine. In the landscape of the story, that's quite deep. And so where do these orders fall in the giant narrative? That's another thing to consider. There's a lot to consider. There's plenty of horizontal pricing issues to worry about, regardless of the other things. You just got to see what feels good. If it feels risky, maybe it's not so risky. I mean, if you just take the position size down, that could help. It looks like we're going to engulf here now. They've trapped people. We've got the London auction. They took out Asia's low. Here's where we're looking for the total engulf, which will start to break this trend line. And maybe we're due for one more sell-off before maybe the Dow Jones is going to crush it down to here. We're happy to buy here. So I was watching this sovereign citizen fail. And these sovereign citizens are like, well, I'm happy to give you all my information, but first, I'm very happy to oblige you. Don't forget, we're always going to buy here. We didn't get no fill there. Okay, we could still get filled, but don't forget we bought at the market on that pullback. So we added one at the market. And now we got to cash out again on our scalps. We can't guarantee that that is the bottom. So I'm allowed to buy any even shallow pullback here at the market. Looks like I'm not going to get it. It looks like they're going to go after this now. So we have to cash out over winners in the sell window. We're forced to do what the other traders are doing. We're forced to see the seller window and cash out our buys. And take something off the table. Expose, free up the margin. Going flat as a winner at the end of the day. And just don't push it too hard, you know. You're not going to be able to be awake for all these trades at the market. But on the limits, you should wake up in profits if you bought, even if you bought like some Fibonacci bullshit back here, but in a range, you got filled. Even if you just bought 20 pips deep, just get used to putting in random orders 10, 20 pips deep and just seeing how magical that is. You didn't have to be there to pull the trigger. Don't wait for a fucking stupid pin bar to get in the goddamn trade because it's at a certain level with the moving average queued up. I mean, I'm just saying, if you're doing that, you're just living in a utopian nightmare. See how fast that filled? And this is why trend lines, this is a triangular vacuum. In other words, this is the vacuum is increasing. Not looking at the trend line as much as I'm looking at the price left behind. Look at that reaction. And the big boys are selling here at the bank level, see? They sold into that window, and they're almost ready to cash out about now. All we got to do is pull that back a little bit. They're out. Boom. Now, if I'm flat too, because I knew I had to get out of all my winners up here, I got plenty of margin now to start throwing buy limits. So it's just rinse and repeat over and over. For me, I'm going to trade one currency pair and trade the shit out of it. I don't want to see the guppy. So every time somebody brings that up, hey, what do you think of the dollar CAD? I'm like, this is like asking me what I think about the ex-wife from the fifth ex-wife. Okay, yeah, but that's not the girl I'm banging right now. I mean, I guess banging the euro because it's so tight and so stupid. It's like a stupid tight girl, She's got a nice body. She's dumb enough to manipulate. Honey, what do you want to go to? She goes everywhere I want to go to dinner. And look at this. What do you think they're going to go try to go after this guy's the bears stop up here? So I'm gonna be the guy that puts sell limits up there for the scalp. And maybe I did buy this rambunctious pullback into structure on the 1 hour just for if I happen to be awake. And look at the dynamics is constantly changing here. Anyways, it goes on and on. I'm sure you could see there's at least 3 trades out there. There's the breakout trade, the Goober-esque, play it safe. There is the dangerous limit. And there is the completely boneheaded market order that you literally, when it's down, you buy, it's up, you sell. Because you're never going to make money chasing it. Because if you can imagine here, you're like, oh, I'm getting confirmation. I think I'll buy here, I'll buy here, and I'll buy here. Well, I mean, really? So you're looking for this hard fucking down move. You're getting filled on limits, but you'll buy some more at the market in case they don't take it back to this limit, which you're hoping for. You're always hoping for extreme. And look at the bears are just killing it on getting filled here. They went after this fucking low. Holy shit. They made all that fucking money. They made it. There's a mini auction in golf from the top side. So, and I'm only going back a few bars. You can see all this bottom becomes a top here in we're only talking about 5-6 hours from structure to structure. If you're in big enough on these trades, you will make money. But you're running different schemes, and so you're going to have, market orders and limit orders, hopefully. Hopefully, if you're doing good, you're not getting it on stops. That's my gauge of, ultimately, I think the ultimate is to never trade at the market or on anything but limits, because you can see the mini VAX and how to size that and how to space it, and that's when you really say, I got it, I see. You can also cash out when you've accumulated quite a bit of limits considering where your account is right now as far as growing it. I would say it's better to stay in the same kind of realm. Don't say, well, I really like this system. I think I'm going to load the wagon, because what's going to happen is you're going to give the market too much space. You're going to overestimate how far back the market is going to plunge into a hole, to a vapor lock, into the vestibule, the foyer of the past. That's really going to matter. Anyways, 1 hour chart, rehearsal, out.